Officially, good morning, happy Sunday. Welcome to the Options Income Launchpad Sunday Market Insights. My name is Scott. I will be your host. As always, this subscription service is for education and illustrative purposes only. Nothing we do or say should be considered or construed as a recommendation to buy or sell any security, financial product. We're not brokers. We're not advisors. Therefore, any decisions you make should be done so at your own risk. Yada, yada, and yada. If we have time, would you mind? Yeah, definitely. Is there a particular one, like one from the alerts that we were looking at to take a look at? Okay, yeah, we can do that. The NVIDIA. We can do that. We can definitely do that. What else can we do? We can market posture, of course. We can evaluate the week ahead so that we understand what potential economic news might there be. And I say potential because with the government shutdown, our expectation should be that we continue not getting economic news updates until the shutdown has resolved. What else? Good morning, Vladimir. Good to see you. What else? Sectors. We're going to pay very close attention to our sector rotation. And then I think we need to do some thinking about the watch list and the range that we have in the watch lists, where we have opportunities and what we need to do with them. Good morning, Bob Rowland. Good to see you, my friend. We'll go through today with the full watch list today, and there may be some that we need to start getting rid of, where we're like, hey, you know what? Just because it is on our watch list doesn't mean it stays there. We need to, take advantage of Sundays to make some decisions about what parts of our watch list can be removed, dialed back. And then lastly, second to last, we'll create an early week opportunity list. I'm literally pulling out my note card now, making sure I don't put it over my note to myself to cancel YouTube TV. I had to get a free subscription to YouTube TV yesterday in order to watch some network television. It's like you get 10 days free, and I'm like, oh, I better hurry and cancel or else I'll forget and they'll charge me. And then I watched my Utes lose to BYU. Horrible. Waste of 3.5 hours. Sorry, I just had to complain. Right? Thank you, Steve C. Gets it. He's like, yeah, it ruined your week. Lastly, what we'll do is talk about our trading plans. We are on Section 8. Section 8 is setting goals for improvement, goals for better trading, better trade management, better routines, better rules. Our goals should be focused on process, because if the process is good, the outcome takes care of itself. That's our belief. We'll talk a little bit about that later in the day. Okay, let's get into it. Here is my chart all ready to go. Already did the reset. Very exciting. Here is my market posture log. All ready to go with the 19th in place. My prediction as of, although I think I missed this because I think the volume turned out okay. So I'm actually going to, before we go, I'm going to put 3.5 by 4, 3.75 by 4. It may not drop the full half of a point. It may not. So I'm looking for a drop between maybe a quarter and a half a point. Hoping that this thing will stabilize. It's very difficult for it to stabilize in the midst of a government shutdown. And calls to the Fed for rate cuts. Yeah, okay, let's do it. First and foremost, long-term trend has not changed since July the 20th. Before that, it was a 1, half. So, okay. So since July, it has been 1.25. Let's go take a look at this one. So actually right through here is when we're like, it broke and we made it. It was a 1 from here. Then it became 1.25 and it's been 1.25. Yeah. I don't see any reason to change it. No change for Steve C. Anybody? Same? No. Yeah, I agree. 1.5. It's right stuck in here. It looks like, we're in a consolidation. It may not be big. It may be a minor consolidation. So overall, I feel like that looks, it looks fine. It looks okay. I'm going to leave mine at 1.25. If we start to see more selling pressure mount up, then we'll make a change. But until that time, we have what we have. Okay. Well, that was quick and easy. Let's go to 6-month daily. Now, you'll remember last week it dropped because of this big candle here. And the reason it dropped last week was because, I want to draw a straight line here, was because if I play connect the dots, I had a pretty steady trend through here that was back from May up until last week. That was a pretty steady trend. What's up with Thinkorswim? It's where, you know what? I got into my computer and noticed it was stalled in time to reset it before we started, Bob. So that's what happened. Yeah, right? Lucky us. Oftentimes on Sundays it works. Like I come on and I'm like, oh, is it working? I'm like, oh, great, it's working. And then it like goes into its weird Sunday stall right as we start. But today I noticed the stall early, so I guess I can take a little credit for it. Let's go back and look at the chart. 1.25. It's been 1.25 for so long. It was 1.5 for a little while. 1.25. So since May, it's been between 1.25 and 1.5. And I recently dropped it to a 1. If it pops back above, if it gets back next week into like this old range, I'll give it the 0.25 point back. Can't log into yours. Spoke too soon. Damn Sundays. Okay. Um, but sorry, let me go back. But you'll notice that when we broke this line and then we tested and tested, we keep testing the underside of the line and we can't get back in it. So for now, taking away that quarter of a point actually makes a lot of sense. Right? It makes a lot of sense. So yeah, nothing that we need to do with it at this point. No change from last week. Me as well. Okay. Man, everyone's on the same page. Looking great. Okay. What else? Let's get to volume. Man, this has been a pretty easy one so far. Everybody's on the same page, feeling pretty good about it. Let's drop this down to 1 month daily. And we were talking about this on Friday. And I don't know where everyone was on Friday, but we missed you. First of all. Second of all, there was only a handful of us. Those who came were amazing. Carried the day. We had great discussions. Built a trade together. It was great. Business trip press. I actually in the recording said, please send me your doctor's note, but I'll accept a business trip note as well. That's fine. If you were traveling for business or had a doctor, then you're excused. I can only imagine you were there in spirit. Oh, Jacob said exhausted. All right. Fine. I'll have some grace for those who didn't come. Just saying that we missed you guys. That's all. We missed you. Okay, what do we have? So here's what was interesting is it was because it was light. Don was bartending. Okay, fair. Because it was a light day, we ended early. We're like, oh, we have 10 minutes left. And we didn't go all the way, but I was like, the volume could go to the wire. I said it looked like we're gonna get above average volume, and we did. We have 80 million, and then we got 96, so that's 20%. So let's put a new box in place, and it was hovering. It was like 0.53, 0.52, where it was like it could be above 0.5, maybe not. We finished at 0.57. 0.57. So right at the end of the day, what happened? Boom. Nope, that's not what I meant to do. That was not as dramatic as I was hoping. Right at the end of the day, boom, the buyers snuck in, grabbed the B. Do you agree? Do you disagree? Bob agrees. Stephen C. Stephen D. Stephen C. agrees. Don agrees. Yeah. So what does that mean? Well, let's discount these. We'll throw out this B, but we'll also throw out this S. So we're like, we don't need you. We're not going to count you. You gave it a B on yours. Very nice. I think we're all in agreement then. We're all in agreement. Okay. So we have a couple of T's, an S, a T, an S, and a B. So I have two cells. Two cells, this one and this one. I'm not counting those other ones. I have one by here. And then I have a tie, and a tie. Let's even discount. We'll take none of these. We'll just be like, you know what? If it's in the last week, we're going to say none of you count. All three of you are just going to cancel out. So I still have two ties. 2, 1, 2. Two cells, one by, two ties. That's leaning a little more towards the sellers, but only a little bit. What is that going to be? A 0. That B, if we didn't have that, if it was a 202, this was going to drop to a minus 0.25. But because we got that last B in there, right, that B gave us this right here. Bam. What did we end up doing? For me, without that last ditch effort of the buyers, this was going to drop to a minus 0.25. That's why I hurried and threw in this 3.75 to 4, because I was thinking it was going to drop a half a point, but then I was like, wait, if the volume held on, then it's not, and it did hold on. So my volume is still a 0. My volume is still a 0. Give me your thoughts. Okay, halfway through. Wasn't sure about the vol, but it makes sense. Okay, halfway through, and I am unchanged. Yeah, okay. Oh, you pushed yours up to a 0.25. Okay, interesting. Yeah, I don't think it's there. El Jago says, I still don't get when we count. You mean this back week right here? Honestly, it is a bit subjective, but it tends to not influence it. So if you notice, if we included it, we would be 3, 2, 3. Without it, we're 2, 1, 2, which is basically the same score. Oriented just a little bit more towards the sellers than the buyers, but it's the same thing. So for me, if it's not going to impact it, I'm kind of just like, you know what, it's stale, let's throw it out. If it was only these 2 days here, I'd definitely throw those out. I'm like, they're gone by Wednesday. Those are gone. By Tuesday, actually, they're gone. Line of sanity says what? Pretty flat. Pretty flat. So I think a 0 makes sense, right? I think the 0 is right in line. So that's where I am halfway through. Okay. You're going to have to bear with me. My wife had to run to the store, and I have a barking dog. So talk amongst yourselves for about 3 minutes while I go handle this. I'm very sorry. I'll be right back. Okay, sorry about that, everybody. Oh, look, a little discussion going on. Love it. Love it. Love it. Cautious. Love it. I agree. Graylin also agrees. Okay, let's talk about the major market, which has been the strongest part of our analysis. It got to a 1. It's been staying there while everything else has teetered and tottered a little bit. Let's see if we have more of the same. Where are you? Come back here. There we go. All right. All right. Who's on top? NASDAQ still holding on strong. Now, on this first perspective, the Russell actually made its first appearance. We had it scored but without needing this one. It got close, and we were like, okay, we have 2 out of 3. It actually, even now, made its first appearance just briefly into this second position, and then it dropped back down, but still holding steady above the Dow. The Dow really was kind of flat. So where others made progress, in fact, I think we'll see that this one made the most progress. But let's keep going here to 133. Okay, 133. Who's on top? NASDAQ. And on that same day, the Russell actually took a quick peek at leadership on the 133. So plenty of strength still holding up on multiple perspectives, showing where the NASDAQ and the Russell are the leading market influences right now. And that NVIDIA trade was late. You know, we actually built it live together. And we were thinking, we're not probably going to do one. And then all of a sudden we were like, you know what? A spread, controlled risk. If good news comes. And so we said, if you need a trade, if you have a thought of a trade. I don't know if anyone who was live took the trade. Was already in it. Sandy said. Sandy's like, yeah. I already saw it. And I already took action. Love it. So, very cool. Yeah, it definitely looks like the stronger of El Jago already in 2. I'm not surprised. You know, I'm not surprised. I love it. Let's drop down to 66 days. You can see the Dow pretty still. Like, there's just no signs. What are we looking for here? We're looking for signs that the strength of the NASDAQ. Say hi to your dog for us, Bob. The strength of the NASDAQ, the strength of the Russell are holding up. There's no diminishment. There's no increase in the strength of the Dow where it's like, is it getting defensive? No, we don't see anything that looks defensive from this right here. And the whole point of this analysis, all of these segmented component analyses that we're doing, these 6 different ones, is to isolate and be as objective as possible, meaning don't think about there's a government shutdown. We don't think, oh, well, there's an asterisk here, because we don't think about that. We say, what do the charts tell us? Nothing else. We don't care. We don't think about shutdowns or Fed or anything else. All we do is we standardize an objective analysis of these components. And we say, okay, if all I'm looking at is the four major markets and how they play, nothing else, what do I see? I see bullishness. In this analysis, it's been the strongest, and it continues to be the strongest. Let's drop to 66. More of the same. The Dow is lagging. It's behind. There's no urgency or market shift that's like, ooh, we better head for safe harbors. That's not happening from an institutional level. Right? You can see the leading market. Am I all the way over? There we go. I wasn't all the way, but even still, the leading market is the Russell. The second is the NASDAQ. The watermark is the S&P, and there's the Dow. So still a market showing a strong appetite, an ongoing appetite for risk. So for me, it stays at 1. We definitely still want to go look at the 22-day because that's what we do. And here's something interesting. Is in the last month, your chart's much different or your score is much different? Oh, was I not pushed all the way over? It always ends up being the day that I don't. Okay, is there any change? No, that was all the way over. 133. Only for that one? I'm just going to go back and test because I didn't check it. But so far, so good, right? So far, so good. 66. Yeah, no, that looks fine. Okay. And 22. What does the 22 tell me? That in the last month, it's really kind of just a bunch of parity. There's the NASDAQ got the highest and finished slightly ahead. The Russell went the lowest and is actually in the lowest position now. But overall, it's mostly sideways. It's between 0.5% and 1%. 0.5% down, 1% up. So mostly flat for the last month. Okay. I don't see anything here concerning that's like, oh, but what about this? The Russell got hit just, but it also screamed first, creamed second, right? Because it went from here to here. That's by far the biggest move on the chart of any move, any direction, right? Like that was a big, strong move. And then so it's more volatile. We can see that the Russell's the most volatile, and that's to be expected, small caps. Yeah. My score is going to stay at 1. I don't see weakness here. If there is weakness in this, it's not here. Okay, so let's go. Good discussion. I love the discussion today. I always feel like so balanced when we leave. I get a couple other things done for my routine, and then I'm like, yeah, I can relax. I'm ready for Monday. Do you feel that? It's just like a nice calming, like, okay, I don't know what it's going to do, but I'm ready for something. Okay. What do we have here? We have utilities up at the top. And we've sort of said, yes, there is a component of that oriented around growth requiring electricity. And behind that is the notion that crypto and AI, two of the largest growth, are huge, huge needers of electricity. And so there is that, but there's also, I think we have to say there is maybe an element of defensiveness with the utilities showing the strength that it is. I'm open to perspectives. So we have utilities at the top. Don says he even put on a couple utility trades midweek with that momentum we've been seeing in there. Technology still at the top, so that's good. That's growth. Communication services holding on to a leading position from this perspective, and industrials holding on to a leading position from this perspective. And then you have financials down here. Down at the bottom is staples, but discretionary is really not that. Not the two consumers are very close here. Okay. So we have a foundation. Let's drop to 133. What do we have? Technology. Let's actually stop for a second and look again. Where are we now? We're at a quarter. We dropped it last week. Basically, we said if it gets to a point where only technology is leading, technology has the capacity to carry the market. We can acknowledge bullishness with that, but for me, and this is literally something I've seen over and over, where I'm like, oh, it's only technology, but technology can hold the market until the rest of it catches up potentially. But it's a quarter point. Like, it's just like a pretty standard thing where it's like if there's only one. Now, if there's only one and it's not technology, I'm very, very suspicious of that market. It's probably more of a zero. So I'm coming into this at a 0.25. I'm hoping to see additional growth sectors start to come back into favor. That will help increase our score. If we see more defensives come in, that will pull that score possibly to a zero. So we'll see what happens. Now we drop down to 66 days and we see utilities is leading. We still have technology. We still have communication services. Healthcare. I mean, healthcare we're going to have to acknowledge that as more defensive in this market, right? So we have discretionary at market. I mean, some people are like, hey, it's ahead. For me, it's tied. It's kind of the same. Yes, it's a little bit ahead. I don't think it's enough to call it a leader. It's definitely not down. So I'm kind of like, I feel like I've got two growth, but I've also got two defensive. If we acknowledge that some of that utility is defensiveness. I don't know. I could see that. Here's what I'm thinking to myself. At best, it stays. It kind of feels like the 2 and 2 healthcare and excuse me, utilities combined with technology and communication services could put it to a zero. Steven said he held his. Okay. Anyone else want to weigh in? I'm going to go see if the 22-day helps. No change. Let's drop down and just see. I'm a little on the fence. That's part of what the 22 can help. So when we drop down here, what do we see? We see clearly utilities is moved in. I think that's a little more defensive. I don't know. You see healthcare. You see technology holding on. Who's trying to make a little run? Is that Staples trying to make a run? Bob says, "Yep, Staples is." But same thing. I'm going to say it's more of a tie. But I do acknowledge that the next in line. Look what we have here. We have utilities. We're going to give it some growth credit, but we're also going to give it some defensive credit. We have healthcare. We're saying is more defensive. This is more growth. This is more defensive. There's the market. And then when you look at this You're like financials, discretionary, communication services. Where's industrials? Oh, they're up in here. They're kind of more tied. They're trying to hang on. Energy's down. Are down at the bottom. Oh, I'm telling you, it's kind of pulling me a little bit. I'm feeling a little pull to a zero. I'm gonna come back to that one. 22 is the same as last. Well, it can't be the same as last week because last week's was last week. If it's the same orientation, then that means it's a second week, right? So if it's the same, that means that's now 2 weeks. 2 weeks of that increase, which again, yeah, I don't know. I'm feeling that there's a shift here in the sectors. That's a little bit of a, now it's not necessarily gone defensive. But it's feeling like that. I don't know. I'm on the fence still. I may take a vote. And that's gonna be my score as well as the group score here. We'll come back. Let's go look at the VIX. Let's open this back up. 6 months. Okay. And let's go to the VIX. Okay. Oh, this VIX. So our score now is a 0.75, and we dropped at a half of a point last week. So let's just map that out and remind ourselves why. And the reason why was because, and it was me, I was late. I scored this, and then it kind of was like, was. Like right through here, you're kind of like, you know what? And when we say was, what? It confirms this as a higher low, which should be a minus 0.25. But that did not get scored. I was like kind of holding off. It wasn't like I meant to hold off. I was just like, because you can see it. It also was kind of like holding in here. However, this definitely broke out. That definitely dropped it another 0.25. And we actually, did drop a little bit and then pop again, or you could just simply say we broke. So what I'm scoring this week is another minus 0.25. We even though it's all the way back down here, it set this level, and it's like it let us know that there is concern. It's that escalation we talk about, right? That escalation. So this was what caused last week's score. Now, as we evaluate, dropping it a quarter of a point. So it's still, it's still holding on to some bullishness. Can I get this to move? There we go. 0.5. Okay, 0.5. Back to sector rotation. Here it is. So for me, um, I'm thinking about making it a 0, but there's an argument that we keep it at a 0.25. Now, if you haven't done a vote here for a while, the way voting works is first to 3. So you have to be fast with your vote. First to 3. So it's not like a majority. It's like whoever gets to 3 first, that's the vote. It's a weird system, I know, but we adopted it. We've kept it. Oh man, that was so fast. Don said 0, Press said 0, Steven said 0.25, El Jago said 0, and I didn't even finish my spiel, and the vote occurred, which is exactly how it works. The rules are there are no rules. We just vote. That was amazing, you three. Beautiful. And there it is. Okay, so I like that because even amongst the group, the fast votes, then a fourth came in, but so it did get the majority. But even amongst the group, there's a little bit of like, hey, I could be holding this. I like that we allow ourselves the perspective, right? Let's see it. Let's see what happens. If we're wrong, we adjust, like I did with volatility. So where do we end up? We end up that we did drop a half a point, which is, I mean, we went from 1 1/4 to a half. So if it's going to stabilize, if we get that stability, then great. That would be fantastic. We would love to look for that, right? It's still bullish. It still allows bullish trades. It's kind of at the point where it's like, hey, the momentum's dropping. Are we starting to think about bearish speculation? I think possibly so, especially intraday, right? You might be doing bullish or bearish on day trading already. So what else does this tell us? It tells us that utilities showing strength. We should be thinking about trading utilities for sure. Most definitely. Okay. What else? I've been giving utilities more of a bullish position as it supports tech. Yeah, very much. Okay. So what do we know? We know technology still is a place that's holding up. Communication services is flirting still. Industrials is flirting still. Financials is struggling. Consumer discretionary is struggling. We want to be mindful of that as we choose stocks right now. Any other observations? Let me know. Let's jump into the watch list. Let's look at the calendar. Let's go through the other things real fast, and then we'll go to the watch list. Up here, Monday, U.S. leading economic indicators. No one really cares. No one really cares what these Fed are saying. There's really no information the first 3 days. Thursday, jobless claims only if the government's. I don't see it coming. I think they're gonna push. I think they're just gonna postpone it again. Friday, we have the delayed, and I don't know if they were like, yes, we're gonna delay it to here, and we know we'll have it, because I don't see I don't see the subject to delay. So I'm wondering if this is actually fixed. If they're like, yes, we will be able to deliver this data. Over 7,000 furloughed workers filed for. Okay, interesting. Now, what's interesting here is the we have flat CPI at 0.4. Here we have an increase year over year. 2.9 going to 3.1. Flat here, 3.3. Flat here, 3.1. So what will that do? If it comes in higher, obviously, it's not that. If it's only a minor amount, I think it just emphasizes. Well, I guess it would have to be if it was more than a minor amount, that might push the Fed to consider inflation again as a mandate. As of right now, they really seem to be more focused on employment. I don't know. So let's just take a quick look at the Fed because it's pretty baked in. Let me reload this. And we'll just go through our watch list and find what still looks okay. Okay, so this 99% is the cut. 1% thinks it's going to be 0.5% in October. In December, this is a second cut, 94, and 6% of people think that we will be down 75 basis points, 0.75%. So, like I said, there's no expectations in the market right now that we're not going to be getting those cuts. So, it'll be interesting to see what happens if bad news comes from an inflationary standpoint. Okay, watch list time. Let's get to it. What's still good? Apple. Apple's still good. Apple actually would be one that I thought about and was like, right? We talked about it. We talked about Apple in the group on Friday. Apple is definitely viable and could be a contender for a continuation trade on Monday. You can see this did not give. It gave a candle more like this one. If we get that might be a viable continuation trade if we get some bullishness. So Apple's a contender and a leading contender for a trade alert, as a matter of fact. Archer Daniels. This is Staples. I'm going to hold off. It doesn't look great. I mean, we've been watching it, but it really looks kind of lackluster, and I don't feel like there was a big defensive surge into Staples. So Amazon, still a no for me. ANET is a possibility. APH guys, earnings coming up, so we're just going to kind of watch that one and see. AVGO, iffy. AXP, look at that, back in business. Let's put it back on the list. That was a good one. Whoops, Bank of America. Also, so some financials. There's some hope in financials. Citi Group. I'm going to put Citi on my list still. ABBV. ABBV. Pharmaceuticals. Is that pharmaceuticals? Yeah. That's in healthcare, and we don't really have much in healthcare. Yeah, and it does look viable for a trade, so that's a great one. Let's add it to the list. ABBV. That's actually been on our list before. Comes and goes, but I think it looks fantastic. Nice call out. Let's add that to the healthcare surge that we're seeing for sure. Caterpillar setting up for the next trade. I think Caterpillar's very strong right now. CCJ. I'm going to say that's still a maybe for me if it stabilizes above the 50. just made a new high. CLS. CLS still looks good, but you have earnings, I think, going to be a little too close. I'm going to hold off that one on the list. Capital One is a no. Coinbase, yeah, looks like it could be setting up for another trade right through here. Stochastics turning, even though we do have a higher low. If it comes up above, I'd say that's viable. Cisco, it's hard because it's not. I mean, I think if you're in it, yeah. I don't think you're gonna wait and put it on. Leave that one off. Delta, no. I'm still a maybe for DoorDash. Consumer discretionary looking less strong, but it did hold. We'll see if it can maybe turn it around. Diamonds. DocuSign. I'm still watching to see if it breaks. If it breaks to the downside, that might be one where we do speculate to the other side. There's just not a lot of price action between the break and anything else. EA. Yeah, this thing's just a matter of time. I'm going to take it off the list at this point. We're just watching the stock go sideways until it goes through a buyout. Ford, earnings in a few days. GE, earnings in a couple of days. Just sort of went sideways. Never really took off. The trade was very time neutral with the spread trade. So, you could have possibly taken a little profit at some point, possibly taken a little loss at some point. Just sort of grinded into a basing pattern, which is just a tight range. And the expectation is it's likely going to be earnings that breaks it out of that. So not really something I'm looking to participate in. Gold. I mean, it's up there, but let's still bullish. We've been putting it on our list. It's been tradable. It's moving like a freight train. Google. So we watched it. We drew it up. Some of you probably took it. We never put it out as an alert. I think it was the VIX that I'm like, I just don't. So I didn't put it out as an alert, but I think a few people might be in this one. Still looking good. I would imagine you carried some through the weekend. Took profits Friday. Okay. Took some, kept some for me. GS. No. Right? When we look at the financials, the banks did well. And the credit, at least for AXP, did well. But not Goldman. Robinhood, I still think looks good. They don't have earnings for a little while. If it can turn, I think there's definitely. I mean, this thing's got a fantastic trend. Howmet. I think that's still a possibility. When you see Caterpillar breaking out, you think, okay, can it help this stock break out and make another trend? I mean, it was a great mover back in May and June, right? IBM has earnings, so we're going to hold off on that one. Intel looks strong, but has earnings, so I'm going to hold off on that one. List is a little smaller too, right? I think we'll see. IWM still looks strong. I'm still actually going to put IWM as representative of small caps. It's got momentum. It's tradable. Levi is a no. Levi's off the list at this point. We're not going to keep watching this little breakdown stock. Lumentum on the list and on the watch list. LITE. Holding up. Could be looking for a bullish move here. Meta's going to stay on the list, but it's not tradable for me right now. I want to see a little more strength from the buyers before thinking about it. Morgan did better than Goldman at this point. They broke out to the upside. If they can hold up, there's still a possibility here. I think Microsoft is a maybe. It can grind sideways, but it had a great trend back here. So it's like it tried and then it sort of sputtered a little bit, but it still held on at the 50. Micron is very strong. If it gives us a quick pullback, there could be a trade. Netflix, no, and it's got earnings. Northrop Grumman, earnings. Nvidia. There it is. That's the one that I saw. Pulled back, held, stochastic turned, candle turned, good buying day. So, but the implied volatility is high. So PLTR. Actually, Steve, I hope that the conversation was good. I don't think we're gonna have time to go through that call spread. I'm a little over already. Maybe Roblox. Maybe Reddit. No. Rocket Lab. Yes. SLV. Yes. SoFi. I'm still a yes. It still hasn't broken. SPY looks okay. Tesla looks okay. TSM got through earnings. That's a yes for me on the list. Uber, no. Upwork, no. Visa, no. Walmart, yes. There's the list. There's the list. Now, don't forget to go to section 8 of your trading plans. I don't have it up. Goals. Work on those goals. Set some goals. Right? Make it, your trading plan is stronger. Your rules are stronger. Your routine's better defined, etc., etc. I think we're in a good place. We've got some potentials. It's a good list still. I will see you guys tomorrow morning. And as always, happy trading.